Microsoft reported their Q4 results after the bell, sending shares down nearly 3.5% in the after hours. That is despite shares being down close to 5.6% over the past 1 month. I've also seen shares down as much as 7% at the start of their conference call, but as the conference call went on, this one basically paired some of those gains to now just be down 3.5%. A lot of that comes down to the guidance which management does provide on the call. We'll get into that in just a little bit, but we'll also take a look at it from a technical perspective. This one had been making a steady pattern of higher highs that has now been broken. We'll see where shares of Microsoft can be acquired, or maybe when it's time to sell shares of Microsoft. Hey guys, hope you're doing well out there. It's time to check in with Microsoft Corporation. This 3 trillion giant has been performing relatively well year to date, up 12.5% over the past 1 year. You've probably outperformed with shares of Microsoft compared to a benchmark like the S&P 500, as you're up over 26%. Keep in mind though, the valuation on this one is now getting stretched up to 36 times a forward earnings multiple, and certainly when the growth rates maybe are looking to slow down just a little bit, especially on their key Azure segments, yeah, maybe that higher multiple wouldn't be deserved over at Microsoft for too much longer. Now, revenues in this Q4, keep in mind this was also the end of their fiscal 2024, and so Microsoft now moving into fiscal 2025. Now, their Q4 revenues came in at $64.7 billion. That was good for 15.1% growth year over year, beat estimates on Wall Street by a cool $260 million. That is a lot of revenue to bring in just 3 months, and Microsoft continuing to grow that at more than a 15% clip. On top of that, GAAP EPS coming in at $2.95, beating estimates again by 2 cents. Not a huge beat on that bottom line, but continuing to show profitability is just remaining extremely strong over at Microsoft. They have 3 business segments, that is productivity and business processes, intelligent cloud, and more personal computing. So the first one, productivity and business processes, coming in at $20.3 billion. That came in higher by 11% year over year. The intelligent cloud business, this is the part of their business consisting of Azure, the all-important cloud unit, came in at $28.5 billion, up 19%. And then more personal computing, this consists of the Surface laptops and things of that nature, that came in at $15.9 billion, up 14% year over year. Now, before we get into the Q4 print, let's take a look at forward-looking guidance, which management and Satya Nadella provides on the conference call. So for the upcoming Q1, they're guiding for productivity and business to come in between 20.3 up to $20.6 billion. Keep in mind, they just came in with 20.3, so expecting just basically flat to slightly higher growth sequentially on that productivity and business processes side. Intelligent cloud, the all-important Azure, is included in this, coming in at 28.6 up to $28.9 billion for the upcoming Q1. Again, we came in at 28.5, so right around flat to slightly higher sequential growth year over year, quarter over quarter. And then the more personal computing segment expected to come in at 14.9 up to $15.3 billion. That would be actually a slight decline on a sequential basis. So while year over year, that still should represent pretty solid double-digit growth, quarter over quarter is expecting slight slowdowns. Now, revenue guidance totaling coming out to $63.8 billion. That is on the low end, up to $64.8 billion. That is on the high end. The Q1 Wall Street estimate was at $65.5 billion. So they're well short of the Q1 Wall Street estimate, which is at $65.5 billion. Let's say on their midpoint, this company posts $64.5 billion. Yeah, well, they still would be $1 billion short of the upcoming Q1 guidance. And so that's probably what is keeping shares down at roughly 3.5, nearly 4% in the after hours, is that you have a Q1 revenue miss for that upcoming guidance. Should still be growth in the double digits, just not as high as what Wall Street was anticipating. They may have to bring these Q1 estimates down a little bit, and then subsequently maybe those Q2 estimates, which is really the calendar year end, also come down just a little bit. So keep that in mind. Microsoft coming in with a guidance miss, which I think is weighing on the stock. Now, in terms of their business units, that is still looking quite impressive. The all-important Azure is what I want to talk about first, as you have 29% growth on a GAAP basis year over year. Now, while that might look impressive on the surface, look, anything growing 29% is still growing extremely rapidly. But for a company that is valued now at a pretty steep earnings multiple of close to 36 times on a forward basis, and in fact 32 times on a 2025 basis, while 29% growth on the Azure side might be good, the expectations were actually closer to 31, in fact 32% growth on the Azure side. So now they came in underneath 30%, at least on that GAAP basis is slightly missing what Wall Street was anticipating for the Azure growth rates. Now, while a 7% reaction I think is certainly a overreaction, I think a 3 to 4% downward move, considering you also missed on Q1 guidance, considering you also missed on Azure growth rates, slightly could be justified. I think this one had been on a monster run, and certainly when your expectations are really high and you don't come in and basically even meet them, yeah, you will see somewhat of a sell-off. Now, keep in mind, 29% still stellar results, still continuing to grow at a very strong clip. On top of that, you saw growth in LinkedIn up 10%, Dynamics 365 up 19%. You're even seeing growth on the Windows and Windows OEM side by high single digits. That represents in their more personal computing side. You are still seeing slowdown on the devices, which was down 11%. The devices really have been slow for quite some time at this point, and they'll likely continue to be muted into the Q1, likely putting some pressure on that more personal computing segment. And now what you're also seeing is Xbox up 61%. Keep in mind, they're still lapping that acquisition of Activision, and so they'll still continue to put up those 60% growth rates until they really lap that acquisition sometime, I believe, in Q2. And so until then, you'll continue to put up strong Xbox growth numbers, and then once that gets lapped, yeah, that will sort of taper off. You also saw strong growth in the search and advertising business, as that was up 19%. We heard from Google last week. They're continuing to dominate on the search side. We'll take a look at some stories as it comes to search and maybe some that can help out Microsoft in the search and news advertising as they move forward. In terms of the different business units, look, while we know revenue is fantastic for pretty much all of these business units, what's even more impressive is the operating income they spit out from these each segments. So productivity and business came in at $20.3 billion in top line revenue for the last 3 months. The margins on that business are nearly 50% as you get to generate $10.1 billion in operating income from that business unit. Similar story, in fact, a better story on a 12-month basis, as you have $77 billion in revenue and you have more than 50% margins at nearly $40.5 billion in operating income. From the Intelligent Cloud business unit, this is their Azure and their cloud segments, $28.5 billion in the most recent quarter. That's on top line revenues, from which we get to generate nearly $13 billion in operating income. While the margins on this business isn't as juicy as your productivity and business, which really is a software as a service recurring subscription business segment, I think despite the margins not being as attractive on Intelligent Cloud, this one really continues to have the best growth rates, and still Microsoft continues to invest the most heavily in building out their cloud data center business, as that's still the dominant run rate from a revenue perspective when it comes to Microsoft's top line revenues, and still generating well in excess of $50 billion in operating income. The more personal computing side continues to remain relatively slow, year over year still growing, but you also have a lower margin business generating just $5 billion in operating income. Really not that significant over at Microsoft, especially when you take a look at their other cloud and productivity business units. So this company, from a quarterly perspective, from a yearly perspective, looking as you would expect, $245 billion in revenue for the last 12 months. That is just a staggering amount of revenue from which you get to generate $109 billion in operating income. This company just crossed over $100 billion in operating income. That's after you pay out the cost of those sales. That's after you pay out your employees running these business units. You generate more than $100 billion just operating Microsoft Corporation over the last 12 months. And that's certainly why this company is valued north of $3 trillion. It's because they just spit out so much in those operating incomes that will likely, again, continue to grow, as they're guiding for full year double-digit revenue growth. But then they're also guiding for higher Capex, which we'll take a look in at just a minute, as this company continues to spend heavily in order to probably down the road see greater revenue and operating income growth. Now, what I want to point out is some news stories that are coming out from Microsoft in the, call it, past week or so. This one coming out today, as Microsoft stock dipping amid a service outage led by unexpected usage spike. So on Tuesday, Microsoft did investigate some issues regarding a performance degradation regarding multiple Microsoft 365 features, and that really happened midday on July 30th. And I think not a huge deal. They did have engineering teams work and diagnose that relatively quickly, as I'd say in a couple of hours that was back up and running. But what this does do is sort of put another question mark when it comes to Microsoft security, when it comes to their services and really reliability. As we remember last week, or I guess just about 2 weeks ago now, Microsoft had that major outage recently leading to the blue screen of death. That was regarding the update by cybersecurity firm CrowdStrike that really took down a ton of Microsoft and Windows PCs really worldwide, and that was a big deal, especially for CrowdStrike stock, but even Microsoft not having a good look considering so many of their Windows PCs went out by simple glitch in the CrowdStrike cybersecurity platform. So I think this one is, another story to really consider Microsoft's reliability and cybersecurity. They should continue to invest in the space, and I'd say continue to reduce outages and disruptions like this one. I think this sort of puts a black eye if it continues to happen regularly. Now, OpenAI Search GPT would likely remain an overhang on Google in the near term. That's according to Wedbush Security. So first of all, the reason why this is being brought up in the Microsoft video is because obviously, if you don't know, OpenAI is backed by billions of dollars from Microsoft, and certainly if OpenAI benefits, that should translate over to Microsoft. And Microsoft does use a ton of OpenAI's large language models and really integrating things like ChatGPT and possibly now Search GPT into their browsers, and now hopefully search engines like Bing. So we know Google has more than a 91% share of the search engine market. That certainly is no surprising statement, especially when you took a look at Google's results they posted last week, just pure dominance in the search and advertising business. And while Search GPT is only being tested by 10,000 users, OpenAI is just getting started. So I think we're still a long way away before something like Search GPT takes away significant market share from Google. But I think the upside here is that if you can integrate something like Search GPT into search and advertising for something like Bing, I think that could help their traffic acquisition costs be lowered and contribute maybe to increasing the market share of something like Bing when it comes to a search engine, at least maybe even just a couple of percentage points. Certainly you won't overtake Google overnight, but I think Search GPT has possible upside if it is successful in challenging Google in the search engine market. So I think we just have to wait and see, but a technology by OpenAI that certainly could have benefits to a company like Microsoft on their Bing and advertising search platforms. Now, on top of that, OpenAI today released a realistic voice assistant to some select subscribers. This report coming from Bloomberg, and so they're saying advanced voice mode will be available to all ChatGPT Plus subscribers later in the fall, but today they announced a limited number of subscribers getting access to a realistic voice assistant that is for ChatGPT. Now, if you don't remember, last May, OpenAI revealed a new feature that really had a voice assistant sounding very similar to actress Scarlett Johansson. That received pretty good amount of backlash, and then OpenAI did some tweaks, took it down. Now they've, looks like, made some changes to that version, and they're looking to gradually launch that in order to monitor usage closely and then continuously improve it based on safety, based on real world feedback. So I think this is, first of all, talks a little bit about OpenAI's closed source system, that they're having to launch things gradually and monitor them closely in order to see how feedback it receives from the real world. I think if things were open source over at OpenAI, which really is how they were meant to be initially, I think they would be able to at least be more nimble and improve on their services a bit more faster, as you have other developers that can contribute on to your technologies. And I think that's one of the reasons why Llama has been so successful, and we'll certainly speak about Llama more when we take a look at Meta later this week. But I think ChatGPT going down the closed source route certainly has these challenges of launching things gradually. Maybe if there's some backlash, they would have to take it down completely. But certainly if maybe this voice assistant that releasing now can be successful, again, could be certainly beneficial to OpenAI, which could translate at some point into benefits over at Microsoft. Now, in terms of the statement of income over at Microsoft for this Q4, we saw $64.7 billion in total revenue. That was growth of nearly 15% year over year. They did see some decline in their product sales, but services more than enough making up for that. Now, the cost of revenues also ticking down on the product side, simply as they have less products to sell, and then services continuing to ramp, but your cost of revenues not increasing nearly as much as your top line revenues. And so you were able to increase your gross margin up to 45 billion. Last year, you were nearly at 39 billion. So significant uptick on those gross margins. Similar story year over year for the full year, up to $171 billion in gross margin. Last year, you were at 146 million. You continue to spend more on your R&D, more on your sales and marketing, although not by a lot, and then a little bit more on your G&A in the most recent quarter. Your operating income comes out to $27.9 billion, up from $24.2 same time last year. You pay out some other expenses, and you get to net income of right around $22 billion, roughly 10% higher than when we were last year, close to $20 billion. On top of that, your shares outstanding are declining, although not by a lot, as this company doesn't have a huge buyback in place, really just has buyback to really offset that stock-based compensation. But all things looking as expected from their statement of income, everything in all of their business units continuing to chug along and spit out just more and more operating and gross profits. In terms of the balance sheet, this company is extremely well capitalized. Really, there's no fears when it comes to Microsoft's balance sheet. They have one of the strongest balance sheets on Wall Street. You have nearly $75.5 billion in cash and equivalents. That is still down from last year, as we now have rolled in that Activision acquisition, and so some of that was used in the form of cash, and so they did pick up some short-term debt, nearly $6.6 billion of short-term debt and another $42.6 billion in long-term debt. So while the balance sheet isn't looking as great as it was a year ago, I think because of that Activision takeover, this company is still just having plenty of cash flows to continue to bolster up that balance sheet, and we'll see that in just a second. So $22 billion in bottom line net income for the last 3 months, that turns into nearly $37 billion of operating cash flow. So significantly higher operating cash flows, especially when you compare it to same time last year, right around $28.7 billion. Similar story on a 12-month basis, nearly $120 billion of operating cash flows. That gives this company just a boatload of money to play around with. They can do different things like pay off their debt. So in this most recent quarter, paid off nearly $13 billion of that debt. Over the last 12 months, paid off nearly $30 billion of that debt. So despite taking on that debt to complete that acquisition, this company just having enough cash flows to really pay off that debt at a pretty fast clip. I would say that debt should get paid off in just a handful of years. On top of that, this company is doing a buyback of roughly $4.2 billion over the last 3 months, $17.2 billion over the last 12 months. You get a dividend of nearly $5.5 billion. That equates to close to $21 billion over the last 12 months. That dividend isn't big, at least at the current time. This company can certainly turn into a great dividend growth story, especially held over a long amount of time. Now we come down to the all-important Capex line, or really the line where they're investing in property, plant, and equipment. This is the line that a lot of investors, certainly at the current time, while this company is building out their data centers, wants to focus on. And so despite having nearly $37 billion in operating cash flows, they spent close to $14 billion. That is up nearly 50% year over year in additions to property, plant, and equipment. Certainly you've heard from a lot of these big tech companies that they have to spend aggressively and extremely aggressively in the build out of their data centers, build out of their cloud services, because if they don't do this spend now, and their competitors like a Google, like an Apple, like a Meta continue to spend and they get left behind, well, then that should be the end of their business. Because if this company doesn't invest now and they get passed up by their competitors, they simply won't have enough time to catch up. And so they would rather overspend at the current time instead of underspending, because the risks of underspending are just far greater than the downside of overspending. And so that's exactly what you saw, nearly $45 billion in Capex spend over the last 12 months. And then what's even more surprising is they're saying the Capex spend will be higher likely in 2025 as it compares to 2024. So what this first of all means is it's probably a good thing for companies like Nvidia, companies like AMD that are continuing to provide those chips that a lot of this data center money is getting flown down to, along with your chip manufacturers like a TSM, like Broadcom, even to some extent probably beneficial for Intel, which we'll hear from shortly. But what this more importantly means for big tech is their Capex spend will likely continue to go higher. We'll hear from Amazon, and they'll probably have a similar thing to say. Google had a similar thing to say, and I'm guessing Meta will also continue to spend pretty aggressively in Capex over the next 12 months. So that AI arms race continues to move forward, and they continue to increase their Capex spend. And while they do still have lots of operating cash flows and still quite profitable from a free cash flow basis, this company and really all other big techs should expect to see an ROI on this Capex spend at least maybe 5 years down the road. At some point, you should expect to get an ROI on this Capex spend. And certainly if that does materialize, yeah, that could be extremely beneficial for not just Microsoft, but really all big tech and all of your magnificent 7 names. Now, from a technical perspective, this one has been in a very steady uptrend since really October of 2022. More recently, it finally broke out of that and is now once again selling off, down nearly 3.75% in the after hours, down to $407. The first level of support I really see for the stock is right around $400. You've been bouncing off of that level a couple times in the past, really over the past 6 months. I think if you're really eager to step into shares of Microsoft, that could be one level where you could probably see some sort of support and maybe step in, pick up half a share or fractional shares at that level, maybe one share if you really want to build out a 10 or 20 share position. As it continues to head lower, this stock is really no brainer of a buy. As the dip gets bigger, you continue to add more and more aggressively. The next level of support really down here at 360, call it up to $375 a share. That is where I would get far more aggressive if Microsoft pulls back in that range. Certainly you could see a reversal from these levels back into this uptrend, and if you get that, yeah, you're probably also buying Microsoft on the rip higher as soon as it crosses this, because you probably have a confirmation that the uptrend will continue to be intact, and this one really probably has room to run. Now keep in mind the multiple on this name continues to be quite rich, and so this one might probably have pulled forward a fair amount of its gains. So it could also trade sideways for a little while, but regardless, I think all the fundamentals are intact with shares of Microsoft. They're continuing to invest in that Capex spend and certainly not shying away from it. And they continue to have that buyback in place, pay out a dividend, and continue to pay down their debt. So everything looking all good over at Microsoft. The guidance coming in slightly lighter than what Wall Street was anticipating, but they are still expecting full year double-digit revenue growth. And for a company that's already posting nearly $250 billion in top-line revenues, yeah, that is a significant add-on to their bottom line profitability as we move into next year. That was my take on shares of Microsoft, a company that is really a perpetual buy. You just have to pick it up on the right dips and pick it up at the right time as the price to earnings multiple continues to come down and shares continue to sell off. I think that's when you incrementally add to your position of Microsoft. You own this one if you own any index funds, and you probably also own it on its own. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.